All right, well, welcome everybody, and thank you for joining our webinar today titled Firing on All Cylinders, Get Your Engine Optimized for the Future with Anura and Lead Cloud. We all know the best time to optimize is when volume is down. 2023 has been a volatile year, especially for the insurance sector. Today, we're going to talk about some of the techniques that can help you optimize your lead intake and prepare your organization for what's next. We're joined today by Anura CEO and co-founder Rich Kahn and Devin McLaughlin, SVP of Strategy and Marketing for Lead Cloud. Thank you, gentlemen, for joining us today.
Thank you.
Thank you.
Quick introduction for those of you that don't know of our panelists. Rich Kahn is the CEO and co-founder of Anura, a leading ad fraud prevention solution provider that has been at the forefront of the fight against ad fraud for over 6 years. Rich himself has over 30 years of experience in digital advertising and is a recognized industry expert in fraud detection and prevention. Thank you for being here, Rich.
Thank you.
And Devin McLaughlin is Senior Vice President of Strategy and Marketing for Lead Cloud. Lead Cloud helps insurance carriers and other large advertisers connect instantly to their current and new digital vendors faster, more efficiently, and at a larger scale than traditional direct marketing. Devin has spent the last decade developing successful marketing partnerships for carriers like Travelers, The General, and Mile Auto. Before that, Devin worked in advertising with some of the largest brands in the world, like Coca-Cola and NBC Universal, helping them to reach new customers more effectively. So thank you for joining us today, Devin.
Absolutely.
We'd love to hear from our attendees throughout this conversation. We've opened the Q&A section of the webinar, so you can drop any questions you may have for our panelists. As always, we will provide a recording of this webinar to all the registrants within the next few days. So with that, let's get started. Rich, I was hoping we could talk a little bit about how Anura and Lead Cloud work together. How does partner integration work from Anura's perspective?
Well, our technologies are put together in a way so that clients of Lead Cloud can easily opt in to use our platform on their network. So from a Lead Cloud standpoint, it's great because, people that are using Lead Cloud want to have as much information at their fingertips in one spot. So being able to bridge the technologies together makes integration easy because it's already done for them. And using the product and being able to use that information inside of Lead Cloud makes it real, cohesive.
Devin, can you talk a little bit about how the integration looks from the Lead Cloud side for your clients?
Yeah, absolutely. We serve a number of clients in the insurance vertical and through a number of services, whether it's delivering leads, clicks, calls, rated experiences. And utilizing Anura at any stage in that process of buying a lead, a click, or a call is really easy for us as we're already passing data in and we can integrate Anura's solution into that existing process without any additional IT resource expenditure on the part of our client. So it's a really big win-win across the board. We're helping our clients improve their acquisition efforts, and as well, Anura is finding potential fraud and identifying that. And rather than buying a lead, you're buying a claim. So any opportunity to avoid that is a good one, especially as someone who used to buy leads before.
And Devin, you mentioned the insurance industry as a whole. Can you give us kind of a quick overview of what's happening in 2023 and some of the volatility and trends that you're seeing?
Yeah, absolutely. I think really simply put, it's been a tough year for the insurance industry. Looking at it at a very simplistic level, insurance is a promise. And over the last 3 years, holding up the promise that these carriers have made to their clients has become extremely difficult for a number of factors, whether it's inflation, the ongoing issue of regulatory slowdowns across the country, supply chain issues, both with OEMs selling new cars and the parts that they need to repair those vehicles, in addition to rental car shortages, in addition to staff at body shops, in addition to every single piece of that value chain increasing in prices, whether inflationary cost or other, has caused some serious issues, not to mention the law enforcement component of that, the number of traffic stops reducing, the speed of people at which having accidents that are occurring, specific to the auto insurance industry, huge impacts to what they're seeing from a profitability perspective, and why you've seen a lot of major top 10 carriers pull out or slow down their lead generation efforts.
Wait a second. I'm just going to jump in here for a second. One thing I took away from that, so the profitability of speeding tickets is down.
There are fewer tickets being written than had been in prior years across the country.
Just interesting how everything plays into each other.
Yeah, that was one I came across recently and was like, I did not think about that, but it makes sense.
Well, let's face it, if it's harder to get your car repaired or replaced, depending on what the situation is, the more careful you're going to be on the road. Makes sense. Makes a lot of sense. I'd never thought of it that way, but
yeah, and I think another piece of it is the enforcement piece. The focus on major crimes versus just the general policing of, is someone going fast?
So I'm curious, do you have any stats on what percentage of that case is? Like, for example, or maybe not percentages, but what percentage of it is people driving slower versus police just diverting their efforts to enforce? Is there any stats on that?
Yeah, generally the stats are showing that people are driving faster and fewer traffic stops are happening. Yeah.
That was my theory of drive more careful because you don't want to turn your car.
Unfortunately, yeah. I wish that was the case. It also leans into the driving clearly isn't like riding a bike, and when you stop doing it for 2 years and come back to it, you should be okay.
Interesting.
Yeah, that's for sure.
If they're not getting tagged with tickets, they're probably not.
Yeah. And there are some really good resources on that. I believe I'm gonna mess up the acronym, but NHTSA, the National Highway Safety Association, they've got some really good stats on that that are worth looking into.
That's fun.
Well, considering all the, seemingly and potentially terrible things you just mentioned about what's going on in the insurance industry and the value chain there, obviously the focus should be on building a good intake process on the front end if you're doing lead generation. So can you guys talk a little bit about how important that is when you start off that whole process of collecting information for potential customers? How important is it to make sure that process is clean on the front end?
James, I think that's more your line, more your lane.
Sure, I'll take a shot at it. Having been a buyer before, the priority of not just driving volume, but profitable volume, and you'll hear me say the word profitable or profitability multiple times in this conversation, is extremely important, especially now when all eyes are more profit focused versus growth. Finding ways to segment the best traffic, and referencing my earlier comment, how do you ensure that you're buying a lead and not a claim? And what I mean by that is when you purchase a lead and that person looks great, they fit your age requirements, they fit what vehicle, you think their credit score is good, but what you don't realize is that they're trying to get a quote at 3 a.m. on the side of the road after they've just hit a deer, and 5 days later they're going to make a claim. You're not making any money on that. That's not a good situation. That's going to negatively impact the source at which you're buying that traffic. So trying to find ways to improve your targeting upfront and the understanding between the folks that are selling leads to you of what you're looking for and what data you want to get back to decision on is super important to making better decisions.
Yeah, so the area that I look at a lot of from the data that I see is that, and I've been quoting this for a long time, my lead generation on average has about a 25% fraud rate across the board. And that's in general because lead generation comes from all different types of sources. You've got, affiliates, you've got paid marketing, you've got social, you've got organic, video, programmatic, you've got all these different channels. And when you look at the whole, what we typically see is basically 1 in 4 leads is non-profitable, as Devin has said. So we call it fraud. It's just because we know what it is. With somebody that's filling out these forms, that it's not that person filling out the form. And that creates a variety of issues. So if you can identify that with inside Lead Cloud and not purchase that, and then use that budget to go purchase more profitable traffic, you can see a significant increase in ROI. And that's really what the two solutions put together are designed to help you do.
For sure.
And I assume, the whole premise of our webinar today was that it makes sense to start cleaning house and kind of looking at your process internally while demand is low, and making some kind of fundamental refinements to process. What kind of things do you guys recommend, Devin, that people, when they look inside at how they manage this stuff, changes that they adapt to?
Yeah, I'll keep harping on the profitability side. There's a lot that can be done that, at least in my experience, there are holes in how folks are evaluating how they buy traffic and how they're evaluating what flows through. It's difficult to say whether or not a lead that turns into a policy is going to last 4 years or whatever their lifetime value expectation is. A better metric might be looking at loss ratio that you can measure on a monthly basis, that will be difficult at a campaign level, but having an earnest conversation with your lead generation partners to say, this is where we're at, and we know that we are making money, we're not making money at this point. How do we find the attributes that are matching up to this number, and resetting to say, these are the features that we're looking for. And the things that I had in the past looked for are, depending on what your underwriting profile is, and I'll use auto insurance as an example again, does this person have good credit? That's a strong indicator of profitability and a better price, because all of these rating algorithms are based on credit. Whether or not that individual is a homeowner, if you're looking for someone that is further up market, and what's their current coverage? Are they buying minimum limits, or are they buying something higher because they've got a nicer car, or they have multiple vehicles, they have a home, they want to protect their assets? Those are things to look out for, and have conversations with your lead generation partners about, this is not only do I want this, but this is why it's important, and how do I find the right things? I think the closer relationship that's built between not only third-party data providers and the lead generation providers is going to make lead generation come back more quickly, having more earnest conversations rather than just a black box of, here's my ad spend, I'll tell you if it's good or not at the end of the month or the end of the quarter.
Right. And Rich, what kind of insurance-related industry volatility are you guys seeing? As far as, if the volume of leads are down, does that mean the incidence of fraud is steady? Does it go up? Does it go down? How does that look?
It's been pretty stable, because again, once the demand is created, it just seems like it's maintaining its same volume. And it's interesting. I was looking at two companies in the insurance space prior to this call, just getting to see if there's any additional stats I can quote. And I just had two off the top of my mind that were big players in the space. And they were actually averaged together, they were about the same as far as fraud rates, but one actually, when they pulled back, the fraud rate remained constant as far as the fraud number. So the rate went up, and that actually happened on the opposite side. So I guess depending on where they cranked up volume, cranked down volume, whatever they did, maybe one guy turned off a good player versus a bad player of traffic. Another person turned off a bad player versus a good player, depending on how they managed their business. But it's an overall average. We're not seeing any sways, since we are seeing some down less volume in the space, but we're not seeing any percentage changes yet. They're still pretty consistent. But like I said, it's going to be different from client to client, depending on how they manage our data within their buying environment.
And Devin, for the partners that you work with, how are you helping them adapt to this shift in demand? while still trying to maintain, clean lead generation? What other kinds of things are you working through to help clients?
Yeah, we've actually had quite a few reach out to us and ask us that exact question. What can we do? What are the best practices out there? And obviously, Anura is one of the things that we're pitching to them is saying, you have some sort of a TCPA validation solution out there, whether they're using Jornaya or Trusted Form. What are you doing to validate whether or not that person is actually who they say they are? Where are you implementing that in your sequence of filters? Are you running a soft credit pull? Are you trying to run a motor vehicle report if it's an auto insurance client? To more closely determine not only who the person is, but what is the vehicle or the asset that they're trying to insure. Something that I've had a few conversations about recently has been around what happens when you're not correctly identifying the asset, whether that's a home that isn't appropriately valued and insured enough, so that consumers going to be really unhappy when they have a claim and their house gets blown away by a tornado and they're only half of the value to rebuild it. Or if as an insurer you say, oh, cool, Rich has a BMW 3 Series. What he failed to tell us was it's an M3, not a 328, and it's worth $30,000 more than what we thought it was. And now you're on the hook for all of these parts you didn't expect to be. So really ironing out the finer details that can help them more clearly identify what that lead is, who the person is, and what the asset is that they're insuring.
And Rich, can you talk a little bit more about some of the clients you guys have in the insurance space and what you guys do to help try and get them to improve their lead quality, or at least the types of things that they should be looking for?
Yeah, I mean, regardless of the industry, it's the same conversation we have with everybody, because at our core, we're very simplistic in what we do. We just decide who is behind the keyboard. Is it a real person or is it fake? And then taking all that data, summarizing it the way we do, we can help our clients identify the exact locations of where high levels of fraud are coming from, lower levels of fraud are coming from, to help them manage their buying decisions better. We're not fans of throwing the baby out with the bathwater. So basically, if you got a source of traffic that's got 50% fraud, and you're like, I don't want to work with them, we still got 50% good traffic in there, 50% good leads that you still want to access. So being able to make those decisions on the fly inside of a platform like Lead Cloud gives you that flexibility to say, hey, I want us to work with you, but I only want to work with this group of consumers and not that group. Let's focus on, and you can do that in real time. So, which is beautiful. So it makes it easier so that you can digitally, hand pick the ones that you want, the leads that you want, and edge your bet of generating higher profit levels versus not knowing what you're doing right now and just being stuck with a loss of 25% on average to the fraud game. So we educate them all the same way. Whenever possible, if they're using a platform like Lead Cloud, definitely jump in there and turn it on, take advantage of it, because that's going to give you the real-time controls. And like Devin said, there's no tech resources required on your side. It's a couple of switches or a simple email, and you're
exactly.
up and running. It's quick. So for something that has such a light lift and such a big impact, it's crazy not to even test it out. Because when you look at the types of fraud that we see, like I said, I talk about the average 25%, but without naming names, I have a major insurance provider that's in our network. And they were north of 60% fraud. Now, they knew they had a problem. They knew something wasn't right. If more than half your traffic is not going to perform, yeah, there's a problem. But they didn't know exactly where it was coming from. That was the problem. They were able to track and get ideas of where they were coming from. So they had an idea of where the fraud was coming from generally, because they can follow the profitability downstream. But the problem is it's too late. They already paid for the lead. They already paid for certain things. They already expended all those resources to run checks and background checks and credit checks and all this other stuff to evaluate the lead. It's too late at that point. You already paid for it. You already went through the process and all the resources for it. wouldn't it make sense that up front you knew ahead of time this is never going to convert? Just don't buy this one, buy the next one. And that's really where the technologies work together to give a client the best bang for their buck. So like I said, when we talk to a client, everything we want to do is real time. We caution people because they may not be ready for the impact of a real time solution, because depending on their volume of leads that are coming in, if they have a finite amount of leads coming in, and also we come and chop off 25%, it's going to hurt. We want them to be able to chop that off at the same time, replacing it with good traffic, so that their volume remains constant, their profitability goes up, and they see the value in using the solution.
Absolutely. And I had similar experiences as a buyer that I wish I had known about Anura at the time. Dealing with call center operations as a buyer and getting their feedback on, we're calling out, we're getting weird things that are voice recordings that seemingly sound real that aren't real, and how, where are you getting this stuff from? But when I was able to optimize, I started getting the phone calls of saying, how do you send us more? How do we get more? So I think it's not only the profitability piece, it's the maintaining the strong relationship with everyone internally across all of those departments that are ultimately going to sell that policy. So I love the solution. If I was a buyer, I would absolutely use it right now. And why, when we're asked, do we know of fraud solutions that we should check out, Anura is one that we absolutely recommend to folks.
And obviously that, I think where you guys work on the front end of that whole process is one thing, and making sure Anura is in there to help filter out some of that fraud, extremely helpful. But what happens, Devin, after the lead is collected and it's in some sort of distribution or system at your end? How do you guys help clients once they've started working that, or how does the whole lead cloud process work?
Yeah, we can really customize the entire experience from initial acquisition through all the way through their quote flow. Sort of as I referenced earlier, we can develop an experience from just generating a lead and passing it into a CRM directly to a completely embedded click to bind experience. We can implement filters, duplicate checking, additional services to append data and say, is this really, we know this is the person, is this asset what they say that they have? Do they really live here? Is their experience really what they say they are based on what they filled out on the form? And tying in additional services to do that. So I think the real value working with us and Anura as well is we can help you determine which service you should scan through first, whether that's that running an MVR is going to cost you $5, so you don't want to do that up front. You want to run it at the back. If you have another service that costs a penny up front that's going to help you weed out bad actors, you should run that first. And really being able, not only doing that in real time, but being able to A/B test that and say, which one's delivering the best result for me at the end of the process. So there's a lot of different things we can do around optimization there.
And I think we were, when we were pre-gaming before the webinar started, we were talking a little bit about shifting regulatory landscape. And, I think, Rich, I know you're acutely aware of some of the things that are happening on the TCPA side of things. And Devin, I assume you guys are under even more scrutiny because you're collecting or managing PII data. What can you guys tell me about what you're seeing in that space with compliance and with some of the state level changes that have happened over the last couple of months?
Sure. I can take a shot at it first.
The first one.
Yeah. I will probably not step over where you're going to talk about, so I think it'll be all right. Insurance is such a unique vertical. Not having a national governing body in every state having its own rules with politically appointed leadership makes it a complete mess. But I think that's why a lot of us still have jobs. The things that have changed over COVID, the slowness of getting changes put in, the political pressure of carriers increasing rates is absolutely impacting how departments of insurance are pushing back on carriers, again, to that profitability word. The additional complexity of how do you accurately compensate a lead generator for what efforts they're making for you? Because you can't pay them a commission in most states. There's regulations that are kind of changing that may make that potentially viable in the future. But today you're sort of saying, well, they're an affinity partner. We're paying them this spliff for a lead or a quote, whatever. And then how do you not only incent them correctly at the correct amount, but for the right action? It's really tough in that space. There's for us, we don't store data. We're just the pipes. We're passing information back and forth. We're helping to filter. So we really sit in an interesting spot to see what's happening across a large swath of the industry, but don't necessarily save it and intake a lot of that same risk that folks are dealing with right now. So it's really tough. And I won't talk about TCPA because I think that's definitely more Rich's arena. But having dealt with the issues of buying leads and how the shadow of TCPA is always over you, that's a scary thing.
So on my side of the coin, what I'm seeing most of, just because I'm part of a bunch of boards, part of the PACE Consumer Consent Board, as well as the REACH Board, and trying to address that issue with consumer complaints, right? The government gets consumer complaints about something. Once they get to a certain point, a certain number of complaints coming in on a consistent basis, they want to come in and stop it. They want to do some kind of, and it's broad stroke, just we're going to do this. And so what's happening is there are billions of unwanted phone calls happening every month. There's two basic reasons. There's probably a ton of reasons, but there's two big culprits of that. Is one is going to be, you've got some lead generators or buyers that will generate a lead and sell it to dozens of other people at the same time. Now, what happens when a buyer gets a lead? They call it. How many times they call it? On average, from what I've seen, about 10 times before they realize it's not a good lead. So if you sold that lead to just 5 other companies, oops, let me just shut my phone off. 5 other companies, and the first day they all reach out 3-4 times, because that first day is who's going to get them on the phone first is going to win the deal, or have a higher probability of getting that deal. So now the person's getting 30 or 40 phone calls. You imagine going to a form, filling out a form, hitting submit, and then a couple seconds later, your phone starts ringing, and it doesn't stop ringing all day long from different people, and you don't know what's happening. And that continues to happen for a week or two while they're continuing to try to reach out to you. That's unwanted. A consumer is not expecting that, right? They're expecting a few phone calls. Once they answer it, then they expect it to stop. But if I answer your phone call and hang up, I still have 4 other companies that are going to call me. And that's assuming they only sell to 5 companies. There are vendors out there selling to dozens of companies. So this is creating a lot of unwanted calls, even though it's user initiated. Nobody's expecting their phone to ring 30, 40 times in a day by simply filling out a form. It's just not what's expected. So that generates consumer complaints. The next side of the coin is what we look at is the fraud side of the coin, because we know that 1 in 4 leads being filled out is being filled out with bogus information. So quick example, somebody comes along to save money on their car insurance, fills out a form, puts Devin's information in. They've got his name, his email address, his phone number, all the basic information that they need to fill out that form to get that form initiated. It goes through lots of data checks to make sure that data lines up. Everything looks good. Next thing you know, it's passed off to a buyer or a call center within a short period of time, and then within minutes, the phone starts ringing. Devin's like, the person who calls him happens to catch him off basis because either he doesn't recognize the number, is not expecting a call, so he doesn't answer it, which is what most of the time happens, or he gets caught off guard, thinks it's somebody else, answers the phone, and the person says, "Hey, I'm just calling you to save money on a car insurance based on the form you filled out online." And his response is, "I didn't fill out a form."
Nope.
So that's happening hundreds of millions of times a month. Those are, again, unwanted phone calls. I actually believe it's happening billions of times a month. When I did the math one time for an exercise, and I believe it's happening billions of times a month, that type of scenario. So you combine those together, you're going to get enough people complaining to government to put us in the situation that we are in today, where if it's up to the government and nobody stops them, they're just going to shut down lead gen altogether by saying from now on, it's first party consent only. So, and it's all about consent. It's always about having consent, because in that example I gave you, when I call Devin, even though I've got Devin's information filling out a form, I recorded his screen so I can see mouse movements, everything looked like a legitimate person. He didn't fill out the form, so you do not have express permission to call Devin, which means you break TCPA. Big issue. And this is all happening as we speak. They're debating on what to do. There are some examples of ways to get around it, but there's definitely a decision coming down. You've got way too many people in the government. From last I heard, there's like 28 AGs that are talking about this, that are on the side of this general shut down the lead gen space. I mean, you've got the FTC and FCC involved in this, because it's gotten to such a complaint, such a problem, that they now have to come in and step in. They feel they need to come in and step and do something. Think of it this way. The TCPA law came out to reduce unwanted phone calls. I think it was 1992. Has it helped? No. Why? Because people find a way around it.
Right.
You know, and they're not, in all honesty, they're not trying to get around it. They're trying to follow the law, right? Because nobody wants to get in trouble for a violation that they could avoid. You know, you're not allowed to use automatic, telephone devices. You're not allowed to use. So you have to start altering your process to follow the law so that you can, be compliant. But the laws these laws haven't helped us yet. So what we have to come up with is a set of standards that make sense to both consumer and to the businesses, because how many people are involved in the lead gen space? 1 million? A lot of people. I don't know how many.
Oh, yeah.
I'm throwing numbers out, but a lot of people. So a lot of people, their livelihood depends on it. How many companies out there do lead generation? We're one of those companies. We drive traffic to our website to hopefully convert them into a lead for us to send to our sales team. So a lot of companies depend on generating leads to some fashion. So if they just came in and shut down lead gen, I mean, that shuts down a lot of businesses. A lot of jobs go out of business. So again, the boards that I'm on right now are working. So you've got Reach and you've got Pace working on standards that make sense, because a consumer, if I'm a consumer and I want to shop, I should be able to go to a shopping comparison site and compare pricing and shop against a couple of different insurance companies in one location. The technology is there. They're doing it today. And they want to continue doing that. What they don't want is, 50 phone calls in day one. So what kind of standards can we put in place that would be acceptable to a consumer, be something that, companies can follow and everybody would be happy with? So we take all those complaints that are coming in, the consumer complaints coming to the government, and reduce them so that they get to a point where they're minimal and they're just regular. You're always gonna have somebody complaining, but it reaches a level where, okay, we're not getting billions of calls a month that are unwanted. We're getting, tens of thousands. It's a much smaller problem to deal with. So that's kind of the situation we're in right now. So there's two big issues that I see in that side from my lens. And one of them is real simple. Fraud is easy to deal with when you have a company like us. We take that off your plate, tie it into Lead Cloud, make it real simple so you can slice and dice and get exactly what you want. So the two of them together just make it so much more effective and profitable to do everything that you want to do in there. What you do with the lead, once you get a valid lead, that's again going to be on the business, right? Because the business chooses how many people they're going to sell it to. And some people have made their business model selling to dozens of people. That has to go up, or the ability when you land on a landing page and it says, we're going to give consent to our partners. And you click a link and it's like pages and pages and pages of partners. Like, that's not going to fly either. We know there's change coming, but it should be change that can be absorbed and followed by most businesses. And at the end of the day, hopefully it appeases, it reduces those complaints, those consumer complaints, so we can get back to a state of let's focus on business. These are the rules of engagement. Let's focus on them.
And we did have one question from the audience, excuse me, about TCPA specifically, since we were just talking about that. And if the lead appears to provide consent from a consumer and then later turns out to be fraudulent, how does that's still considered a violation of TCPA, even if you don't catch it on the very front?
Say it again. I was thinking through part of it.
So if it creates the illusion that they've provided some kind of consent, but then it turns out to be a fraudulent lead, obviously that's a TCPA violation too, right?
Yes. Think of it this way. Fraud is binary. If you were able to look behind the keyboard visually, you can see whether it's human or if it's a bot, or if it's a human fraud form, because you see dozens and dozens of people behind cubicles, sitting there typing away at these things. You could visually see it, but unfortunately, you don't have that ability. It's not like you can land on a landing page and turn your camera on. I can see who you are and say, okay, I've got a video of you physically filling out the form. This is you. You don't have that. So we have the next best thing. We collect over 800 data points on the user's environment, so we can track what they're doing and how they connected to that form. Think of it this way. Most people that are trying to commit fraud try to hide themselves. IP address spoofing, user agent spoofing, device spoofing. They try to bounce themselves in different ways because A, they don't want to get caught, and B, they want to make it look like a lot of different people versus the same person on the same device doing the same thing over and over again, which is obvious. So at the start, it's either fraud or it's not. It's a matter of whether you identify it or not. However, let's say you don't identify it's fraud up front for whatever reason. You let it go all the way through, find out it's fraud later. You did not have consent at the beginning because that person didn't fill out the form. Fraud is fraud, and fraud doesn't give you consent to call Devin if Devin didn't fill out that form.
Right. Okay. Devin, can we talk for a second about Lead Cloud and how you guys cater to different the variety within the insurance industry? I know we talked earlier about an auto example specifically, but what other, you guys in life, health, property, all that other stuff, and how are the unique challenges that they each have?
Yeah, for us, the systems we have in place are agnostic to what data needs to be passed through. We can intake whatever's necessary, and we do work in multiple insurance verticals. Home, life, health, business insurance as well. So we absolutely do service that, and we have found in this current environment a lot of folks trying to shift and try something new and say, well, hey, maybe I'm going to give Medicare a shot, or I'm going to give health a shot, or small business, while auto and home is down right now. So really the same capabilities are available to any insurance vertical effectively using our system. And I wanted to kind of jump into that compliance topic briefly. Working with Anura and Lead Cloud enables our clients that whenever that decision is made on here are the rules of how lead generation needs to work, they don't have to call every single person they buy leads from. They can speak to us too and say, hey, this is what we want to do based on what the legal decision that's made. Make that change globally. And we can do that for every single source that's tapped in through us. And that's not only in this case, but if there's another factor that's impacting profitability that I didn't mention is catastrophic weather events. If you don't want to insure a coastal area when you know a hurricane's going to be there tomorrow, and potentially get fraudulent claims from those people writing policies as the storm's rolling in, we can help block any new business coming out and leads coming into those areas in real time with that information from our clients. So being dynamic is going to be extremely important going forward and in driving profitable growth.
The timing was perfect because when you mentioned storms rolling in, I just had a big crack of lightning behind me. What perfect timing. I'm sure it didn't come through, but it was funny when you said that.
Well, guys, I think we've kind of covered this topic that we put together where we're trying to understand how to best prepare yourself once the industry turns around again. As you mentioned, Devin, there's parts of the insurance industry that aren't struggling as much as others. So hopefully those who've tuned in today are taking some tips here on how to best manage your internal processes so you can at least mitigate some of the inefficiency that you have now and then prepare yourself for future efficiencies. Any parting words before we go, gentlemen, that you want to add?
James, let me talk about, I always tell people follow the money. That's probably the biggest thing is if you follow the money, you'll be able to identify what's going on. However, usually it's a little bit too late. And that's the biggest thing. Most people don't understand that you can do that and you can optimize to a degree, but it gets to a point where if you want to digitally slice things out and protect yourself with advanced technology, that's where we come into play. And we're happy to scan people's traffic for free, just to see what kind of a problem they're dealing with. But I always like to end on a quote, not a quote, on a stat. Last year was the first year as a global society. We tipped over $500 billion in digital marketing spend. And it's estimated that over $100 billion was stolen to fraud. So it's not a question of if you have fraud, it's more of a question of how much fraud do you have.
Wow. Much more prolific than what I was going to say. My comment is that I'll be at Affiliate Summit East with Rich next week. If you want to talk more about this kind of stuff, I am a self-professed insurance nerd. I love talking about this kind of stuff and lead gen. Really appreciate everyone participating and joining today. Rich, James, thanks so much for having me. I really appreciate it.
Also appreciate it.
Absolutely. Thank you, the audience, again, for joining us today. And thank you to Rich and Devin for a great discussion. We will follow up with the attendees with a recording of this session. There will be a quick survey upon your exit. And if you'd like further information on the services provided by Anura or LeadCloud, you can find Rich Kahn at anura.io and Devin McLaughlin at leadcloud.us. You can also find more interesting and exciting free webinars like this one by visiting anura.io/events. Thank you both for joining us today, and thank you all for attending.
Appreciate it.
Thanks so much.
Thanks, guys.
Thank you.